The final opportunity to get rich has finally arrived. There's no time left now. You'll realize that everyone with even a little money in the world is scrambling every second to restructure their assets. This time, it's very likely to be the most horrific financial crisis in history. Those who don't follow financial news might not know yet, but the stocks that soared last year, where you could just close your eyes and buy to make huge profits, have now started plummeting hard. For example, the leading stock NVD has dropped 28%. Tesla stock, which surged sharply last October thanks to Trump's policies, has now reversed and fallen 46%. Giants like Amazon, Facebook, Google, any company you can name, have all dropped at least 15% or more. This decline has left countless investors in a state of panic and doubt. But what if this is just the beginning? What if the market continues to nosedive? In just one night, a slew of investors using financial leverage could lose everything. They'll be forced to sell off their assets to cut losses, triggering a global asset collapse. By then, it won't just be a discount anymore, it'll be a full-blown crash. This happened before in 2000, 2008, and 2020, and now it's about to happen again. However, the scariest part isn't the market crashing. It's that this is exactly what the US government wants to happen. Why? Because only when the economy goes into a recession will the whole world have to pay the price for America. Greetings, ladies and gentlemen. Have you noticed that the Atlanta Federal Reserve, a branch of the Fed, once predicted that US GDP in the first quarter would grow by 2.3%? But by the end of last month, they revised that figure from a positive 2.3% down to minus 1.5%. What does this mean? It means they're openly admitting that the US has entered a recession. Just a few days later, the data was adjusted again, this time dropping to minus 2.8%. What does this mean? It means the US isn't just in a recession. It's far worse than initially predicted. So if Trump gets elected and the stock market surges, then after he takes office, it'll crash uncontrollably. Declaring a national recession is an extremely sensitive matter in many places, but even the US government has openly acknowledged it. A ton of official economic data is telling us that things are getting worse. Lately, I feel like those old folks from decades ago, that glued to the TV watching stock market news, tracking every move Trump makes to see what he'll do with the stock market. Do you remember? 4 or 5 years ago, Trump just had to post a single tweet, and the market would react instantly. Back then, he kept pushing the Fed to print money to stimulate the economy, causing the market to skyrocket. But this time, he hasn't said a word about the stock market. Why? Just as I was about to turn off the TV, the US Treasury Secretary appeared and announced that the government's main goal right now is to keep long-term bond interest rates from rising too high. In simple terms, they want to ensure US bonds can still be sold. What does this mean? Look at this chart. It shows how much money the US Federal Reserve has left in its wallet. You can see that since 2022, their wallet has been steadily shrinking. So what will they do? The answer is they'll borrow money from the rich. The Fed will take US government bonds as collateral and ask financial institutions and big players to lend them money. This is called a reverse repo, a reverse repurchase transaction. In simple terms, it's the Fed's ability to borrow money from its own financial system. Look at this chart. The higher the blue line, the more bonds the Fed has to pledge to borrow money. In other words, the Fed's borrowing capacity is being pushed to its limit. But the opposite is happening. The blue line will drop to zero this month. That means even the Federal Reserve can't borrow money from its own financial institutions anymore. There are only two possibilities. First, the financial institutions genuinely don't have any money left. And if they don't have money, how can they lend to the Fed? Second, even if they do have money, they'd rather hold on to cash than accept the Treasury bonds the Fed is offering as collateral. So who's going to buy US Treasury bonds now? Right now, the Fed's wallet is nearly empty. they can't borrow, and big investors and financial institutions either don't have money or, if they do, don't want to buy US Treasury bonds. Meanwhile, China, Japan, the UK, and many other countries have been dumping US bonds in recent years. This means US bonds are facing a liquidity shortage. In other words, they're no longer circulating normally in the market. Why? Because the number of people wanting to sell keeps growing, while the number of buyers keeps shrinking. That's why Trump's finance chief said their most critical task is to ensure long-term US Treasury bonds can still be sold. The solution is simple: make America great again. For example, the government will cut staff. Big corporations will lay off employees to raise unemployment rates. Then they'll increase tariffs to create higher inflation in the US. Most importantly, they'll impose sanctions on the world, even deliberately triggering a financial crisis or economic recession. First, they have to destroy, then rebuild. That's how they make America great again. But for us, this isn't the time to waste a good crisis. When most countries in the world can't escape this spiral, money will flow to safe havens, the assets we've prepared in advance. This is the chance not only to protect our wealth, but also to create a new generation of rich people. If you don't want to be a victim of this crisis, and even want to rise to a higher economic class, follow my channel. I'll keep providing you with critical information. And if you're worried you'll forget what you just heard, like this video. It'll automatically save to your playlist so you can rewatch it anytime. Now, the question is, why are US bonds running out of liquidity? Can't America just use its own money to pay off its debts? The answer is simple: because the US dollar can't bead. What does that mean? Listen closely. US Treasury bonds are essentially a cycle of borrowing, spending, and repaying. For example, in the past, the Fed could print $5 trillion, then use that money to buy US Treasury bonds, lending it to the US government. The government would then owe the Fed $5 trillion. After that, the US government would take that money and buy goods from all over the world, importing everything. When that $5 trillion is spent, the US government runs out of money. So what do they do next? This is where the capitalists come up with a plan. The US has spent $5 trillion globally. If they can $4 trillion of it, only $1 trillion would remain in the world, leaving the globe short of cash. Then other countries would be forced to keep selling goods to the US to earn dollars. At that point, I can keep printing money to buy up all the goods in the world, right? So how do they the money they've spent worldwide? Simple. I just borrow it back from them. I sell US Treasury bonds to them and say, lend money to the US government. When we make a profit, we'll pay you back both principal and interest. This means countries sell goods to the US, earn money from the US, and then invest that money back into the US. Americans are essentially working for them to pay off the debt. The result? The whole world uses part of the money they earn to buy US Treasury bonds. The Fed prints $5 trillion. The US government spends $5 trillion. Then by selling bonds, they $4 trillion. This way, the world doesn't end up with too many dollars, and the Fed can keep printing another $5 trillion for the US government to borrow. The government spends again, sells bonds to money, then prints more money. Got it? In other words, US Treasury bonds are a mechanism for the US to money from around the world. Their goal is to do nothing and still use printed money to buy all the goods the world produces. So whether the US government currently owes $36 trillion or even $100 trillion or $1 quadrillion, it's not a problem. As long as about 40% of that debt comes from other countries lending to the US, the system keeps running smoothly. In simple terms, as long as the US can the money they've spent, keep the world short of dollars, and ensure the world still needs dollars to trade, they can keep printing money without issues. In theory, if they're keeping debt money, US bonds might not even need to be repaid. The US can just take on new debt to pay off old debt. For example, today the US owes Japan $1 trillion. and that debt is due. The US asks Japan, "Want to keep lending to me? I'll keep paying you interest." If Japan agrees, the US doesn't have to repay the principal. If Japan says no, the US borrows $1 trillion from the UK to pay Japan. 30 years later, the US figures out how to pay the UK. This is a strategy of trading time for space, or bluntly, stalling. By dragging things out, the US can ease the immediate pressure of repaying debt. This isn't taught in textbooks, where people often think simply that debt must be repaid right away. In reality, debt can be delayed, even pushed onto others to bear. But if the world sells goods to the US, earns dollars, and doesn't use that money to buy US Treasury bonds or lend to the US, then the US can't the money they've spent. When that happens, they can't keep printing money. If they can't print money, they'll have to work and produce themselves to earn money to pay off debt. This is the liquidity crisis of US bonds, and that's the situation right now. In the past, about 40 to 50% of US debt came from other countries lending to them, but not anymore. Now, only about 20 to 30% of the US's debt comes from other nations. This means the money the US has spent can't bead. When the money doesn't come back, it means the world isn't short of dollars anymore. If the US keeps expanding its balance sheet and printing more money at this point, the dollar will immediately lose value drastically, making the world even less willing to use dollars or buy US bonds. When that happens, money becomes even harder to. So what do? Some say Trump is working hard to find ways to earn money to pay off debt, like raising import tariffs or even selling US citizenship. For just $5 million, you can become a US citizen and immigrate to America. What an international joke. As I said earlier, the US's debt doesn't actually need to be repaid, nor can it be. If the US really paid off its debt, the entire global financial system would collapse instantly. Why? Suppose Trump succeeds inning money from around the world, pulling cash back to the US. But if he uses that money to pay off debt, it gets withdrawn from the system again. Plus, the biggest creditor of the US is the Federal Reserve itself. The Fed printed money and lent it to the US government. If the government pays that debt back now, it's essentially destroying that money, making it disappear from the system. So why does the US print money? Because earning money through labor is too hard, so they choose to print money, sell bonds, money, and print more. If the US now stops selling bonds and tries to pay off debt, they won't be able to print more money. So the US doesn't need to pay off debt. Why pay it? If the US dares to reduce its debt, it'll destroy itself. If the US $100 million and uses it to pay off debt that didn't even need to be repaid, they'll run out of money themselves. When the US has no money, it's not just the US stock market crashing. Wall Street itself will shut down because there'll be no liquidity. If no one has money, businesses won't have customers to sell to, and the economy will grind to a halt. Then the scenario many hope for will emerge. Houses in America's city centers might drop to $100 each because the economy enters deflation. But by then, most people's assets will also drop to $1 in value, and banks won't have money to lend for home purchases. In other words, even if house prices crash, asset values will fall too, and most people will still feel houses are too expensive and unaffordable. So don't think the US paying off debt and causing deflation is a good thing. It'll just mean US assets are sold off cheaply, and Americans become poorer. Understand this clearly. No US president dares to actually pay off the national debt. Paying off debt is just a slogan for TV audiences. The real task of the US government is to find every way to reclaim the right to issue money from the world, and keep printing money. In other words, expand the national debt. The more debt the US has, the more money they'll print, and the more the dollar will lose value. Pumping money into the market requires assets to absorb it, or it'll lead to runaway inflation, causing asset prices to soar. So what's the advantage of small retail investors over giants like Warren Buffett? flexibility. Buffett might need a year to prepare to buy or sell assets, while we can just wait for the moment when money flows in, pushes stock prices up, and then jump in. It's not too late. In other words, the big players set the trend, and we just follow it, make money, and get out. Now listen closely. If you don't understand this part, you won't grasp the critical content later. Right now, the US can't money anymore because the world has stopped lending to them. When money doesn't come back, the US can't keep printing more. So what do? Simple. Something we've all experienced. Raise borrowing interest rates. If you lent me $1 million before, and I paid you $10,000 in interest, but now you don't want to lend anymore, I'll offer to pay you $50,000 in interest to make it more profitable for you. That's how the US succeeded in sucking money back from around the world. However, the consequence is that most people are only buying short-term US bonds, while no one wants long-term bonds. Plus, when they saw the US market rising, many jumped in to speculate, pushing prices even higher. If you want to understand more, rewatch the video I posted last Monday. Every video of ours is tightly connected. In other words, the result now is that the US has soaked all the dollars from around the world, but that money didn't flow into the US government's hands. It went into the US stock market, into the hands of American capitalists. As I said before, the US uses government bonds to attract money globally without needing to repay it immediately. They borrow money for 30 years, then use that to pay off short-term debts coming due, borrowing long-term to pay short-term. But now, short-term bonds still have buyers, while no one wants long-term bonds. No one's willing to lend to the US for 30 years anymore, meaning the US government's model of borrowing long-term to pay short-term isn't working anymore. When this mechanism collapses, the US will have to keep paying off short-term debts with high interest rates. For example, in 2025, the US has about $8 trillion in debt due, plus they need to borrow another $2 trillion in new debt. But right now, the National Treasury only has about $600 billion. That's not even enough for regular budget spending, let alone paying off debt. Without money to pay debt, the US could choose to print more. But as I mentioned earlier, if they print more before fully showing money, the dollar's value will plummet instantly, turning it into worthless paper. So what will the US do? This is the key point. The US Treasury Secretary declared that their most critical task right now is to sell long-term bonds. What does this mean? When I talked about this before, many laughed at me, saying I was spreading fear. But now, Wall Street experts are saying the exact same things I did. US geek traders are preparing for a stock market crash to shift money into long-term bonds. Why? Because if the US wants to keep printing money without actually paying off debt, there's only one way: force the money in the US stock market to flow into long-term bonds. But how do they do that? A branch of the Federal Reserve recently announced that US GDP will grow negatively. Meanwhile, recent US economic data all shows the economy has entered a recession. Why? For example, if you're doing business in the US, after Trump imposes tariffs, your import costs will skyrocket. That forces you to raise product prices, making it unaffordable for many Americans. Goods pile up and your business faces bankruptcy. If you still hang on, congrats, but after Trump deports illegal immigrants, you'll lose cheap labor. You'll have to hire American workers, meaning your wage costs will multiply. If you still survive because you're working with the government, thinking government contracts mean no worries, bad news. Trump also plans to cut $1 trillion in government spending. Then you won't hold out anymore and will have to look for a public sector job. But just as you settle in with your golden rice bowl, Trump announces layoffs of hundreds of thousands of public servants to save costs. You turn to big corporations like Amazon or Facebook for jobs, but all these giants are also slashing staff massively. The result? Even society's elite workforce ends up jobless in droves. What about your home and car loans? When you're unemployed with no income, how will you pay them off? Right now, U.S. credit card default rates have risen to levels seen during the 2008 financial crisis. So you see, Trump keeps shouting about making America great again, but everything he's doing is actually pushing America into a recession. Why? Simple. The U.S. manipulates the recession narrative, constantly declaring that the U.S. economy is about to tank, sending a message that even the world's strongest economy is declining. That means no investment is truly valuable anymore. Wherever you invest, you'll lose money. In this high-risk environment, U.S. government bonds offer high, stable interest rates. That means you should quickly move your money into U.S. bonds, and not just any bonds, but long-term ones. Right now, interest rates are at 4 to 5%. If you buy now, you can lock in that rate for 30 years. If you don't buy now, when everyone rushes in, rates will drop and bond prices will rise, costing you more to own them later. That's why so many people have been pushed into a race to grab U.S. long-term bonds. From here, 3 scenarios could play out. First, the ideal outcome. U.S. bonds sell successfully without the U.S. stock market crashing. If so, no problem. But as I mentioned earlier, U.S. bonds and stocks are like 2 ends of a seesaw. Money flows into bonds and stocks lose capital. Right now, the capital needed to prop up U.S. bonds is massive. To maintain balance, the U.S. stock market would have to decline gradually over a long period while still needing constant cash injections to support it. However, this is unlikely. Second, the more probable scenario, and what we often talk about, U.S. bonds surge because lots of people buy in, but the U.S. stock market crashes fast, like the crises in 2008 and 2020. Then, the U.S. can show away money from bonds, allowing the Federal Reserve to expand its balance sheet and print more money without issues. That printed money can be lent to financial giants at near zero rates, letting them buy stocks cheap and push the market back up. This is why Warren Buffett and big financial institutions are holding huge cash piles. Whether it's the first or second scenario, the U.S. stock market has to drop first. Third, the worst-case scenario, the U.S. stock market crashes, but money doesn't flow into U.S. bonds, causing both bonds and stocks to plummet. Then the U.S. economy will truly fall into a recession, and a prolonged one. Why? If U.S. bonds don't sell, the government can't show away money, meaning they can't expand the balance sheet to print money to save the market. If they print money anyway, stocks might recover, but the dollar's value will crash. For example, you invest in U.S. stocks and make a 30% profit, but if the dollar loses 40% of its value, you're still down 10%. The shock will be massive because many countries still hold huge amounts of dollars globally. If dollar-denominated assets plummet, the entire global economy will nosedive, triggering a worldwide crisis. So why is Trump actively doing things that harm the U.S. economy? He's actually holding a knife to the world's throat, sending a message. If countries buy U.S. bonds, everything will be fine. But if they keep refusing, when the U.S. collapses, the world will collapse too. If a financial crisis spreads globally, what happens? Other countries will have to prioritize saving the U.S. before saving themselves. Remember the 2008 financial crisis? It started in the U.S., spread worldwide, but the U.S. recovered fastest. America is still America. But let me repeat, if you understand how the market works, you can not only make money, but do so faster than ever before in history. Hearing this, some might say I'm just blowing hot air. Honestly, I don't blame them. Maybe they're new here. But at least go back and watch my previous videos. I'm not trying to prove anything or show off. I just want to remind everyone of the risks out there and the opportunities we investors see. With my small influence, I hope I can help those with fate avoid this crisis. And I'll tell you this, in 2008, many people were just construction workers or waiters in a hot pot restaurant. Now, many of them are rich folks around me. After 2008, the wealth gap solidified. Those waiters don't need to do anything now. Their assets keep growing, earning them more in a month or an hour than most people could in a lifetime. Mình đã ghi lại chính xác nội dung bạn yêu cầu. I was born too late to catch that chance back then. I was too young. But this time the opportunity might come again, and I've grown up. More importantly, if it does come, I'm ready. I've rolled up my sleeves. And if it doesn't, no big deal. We'll just adjust our strategy moving forward. We'll keep watching the US bond market, but this isn't a long-term strategy. It's short-term, speculative trading. As I said, if US bonds are saved, the government can keep printing money, and bond prices will rise even more. But if they can't be saved, that's why our strategy is hit and run. Make a profit and get out, guerrilla warfare style. If there's anything in today's video you didn't understand, I suggest re-watching the last 2 or 3 Monday videos. My logic is all tightly connected. There have been big market moves lately, but time's limited, so I'll stop here. I share free knowledge on becoming wealthy, an entrepreneur, and an investor to achieve financial freedom. If you don't want to miss out, subscribe to my channel, turn on notifications, and share this video. I also wish everyone who liked this video the best. May you all achieve financial freedom soon. If you found just 1 or 2 useful sentences today that improve your life, I'm already satisfied. Mình đã ghi lại chính xác nội dung bạn yêu cầu.